Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO of Inc. Research. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
How has October been a happy surprise for Canadian stocks?
Well, it certainly got off to a good start with both the renegotiated NAFTA agreement and the news that LNG Canada's project would be going forward. These are two really great developments for Canada, for the medium term anyways. I mean, the trade deal was more of a defensive play in that we didn't cough up any goals. Really, that negotiation was all about trying to keep the protectionist offensive by the Americans at bay, and the government pretty much did that. And I kept hearing about how we gave up on dairy, Jim, but as far as I'm concerned, that was probably one of the better elements of the deal, where we actually have opened the market a little bit more to competition. It's not going to be a huge amount, but all in all, it was a good defensive play by Ottawa. And now we can move on to other more important, or trying to grow the economy in other ways and improve prosperity. This deal let's face it, it's a big business deal. They managed to keep the dispute mechanism settlement in place, which is important to the software lumber industry, that was good. The Americans initially wanted to get rid of it. So, for the long term, medium term, it was a good start. Another good, really great piece of news was the LNG Canada. For those listening who aren't familiar with it, it's an natural gas export terminal that's going to be built, and it will be built. The construction apparently has started right now, this week, to export natural gas initially from British Columbia, northeastern British Columbia, to Asia. So this will be a fantastic news for the North. It's and fantastic news for Western Canadian natural gas producers, because eventually this network, the pipeline that will be going up into northern BC, northeastern BC, it could conceivably connect to the Trans-Canada system to the rest of Western Canada. So eventually, this could help a lot of producers, and boy, we really need it. We sent out a report earlier this week on some insider buying at Peyto Development and Exploration, and that happened on Monday, basically, once as the news of LNG Canada was coming out, and I was looking through their financials, and they were facing earlier in the year the lowest natural gas prices in the company's history. So it was really, really tough times for natural gas producers in Western Canada. So this is a big boost. It's a huge project. I mean, the Prime Minister was touting it as something like, I believe $40 billion, or the largest in Canadian history. And it's a massive project. So it's well done, and it's taken some time, taken a number of years, but we should be pretty happy that this is going forward, and it's a big shot in the arm for Western Canada and private sector investment in this country.
Is one of the reasons why the LNG is going through is that they did it right. They had consulted people, listened to them, and involved them in the project, whereas Trans Mountain, I mean, I tried to go to one of the National Energy Board hearings on it, and the public was banned from the public hearing. Right then, I thought this could be trouble.
Well, it was a different process, as far as my understanding goes, for the LNG Canada, because the pipeline is within the province. The new pipeline that they're building, so the process was different. I'm not going to profess I'm an expert on all these consultation processes, but the process was different. And I think the optics of the project are a little different. There's, not the idea of crude being spilled into the water is one thing, but natural gas is somehow, the liquefied natural gas has managed not to sort of get caught up in that. So there were a couple of factors involved with it. The strategy behind the planning this project was done right. It wasn't easy. There are a number of big investors from different countries involved. We've had a change in government in British Columbia from the Liberals to the NDP. So, it's a testament, I think, to the leadership of the people behind the project as well, because there's so many things that could have gone wrong, and they didn't, and everything came together. So, it's really bravo to the LNG Canada leadership and to policymakers who have gotten behind it and understand we can't continually turn down projects in this country. I mean, eventually, Jim, we have to pay for hospitals, we have to pay for all these welfare programs that we have, and it's good to see the NDP realizing that, even if the Green Party of BC is still off in its dreamland on that front.
Well, if the Greens think voting against the project and bringing down the NDP government would be a good thing, would they team up with the Liberals, who were the ones who were the masterminds behind LNG?
Well, I would think the Liberals would support it, and John Horgan, the Premier of BC, was very gracious to Rich Coleman and the BC Liberals, and even the Social Credit Party in his speech for the announcement of the LNG Canada. So he's a pretty good operator. You don't become premier usually by good luck. You usually have some smarts, and I think he's going to get whatever he needs through. If he does I believe he does require some legislation, and I'd be shocked if the BC Liberals did not support it.
We'll have more with Ted Dixon right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Vadic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
Welcome back. We're speaking with Ted Dixon. Ted, the 10-year Treasury bond in the U.S. is now over 3%. Is that throwing a monkey wrench into the works?
Well, it's not only over 3%. It's at one point blasted over 3.2%, which is the highest since 2011. And this is the breakout in yields that everybody has been kind of waiting for. It's kind of like that EDM song out there. Sometimes the bomb will explode without any warning, and I think that's what's happened here. All with China away, with with data coming up this week that people may have had their eye on. I'm talking about the unemployment data, which is scheduled for Friday. I don't think anyone was really anticipating that you'd have a big bond market sell-off early in the week, but that's what's happened, and now we'll have to see if it sticks. I mean, it could be a head fake here. There's a lot of people who've been short to Treasury markets. That's another reason why there was a bit of a complacency that we couldn't see a big spike up in yields because a lot of people already positioned for this. But here we are. We're back at, so what do we got? We're sort of at 6-7 year highs here on the long bond interest rates. Now we're going to have to see how this plays out. If it sticks, Jim, over the next few days and we don't get a pullback, this is going to have big impacts on people's investment portfolios, probably the biggest in 6 or 7 years. We've had a pretty benign interest rate environment for stocks, for condos in Vancouver, you name it, for the whole range of risky assets out there. And, this is going to change the equation, I think investors who believe they may be in areas that are immune from this may be in for a bit of surprise. For example, the marijuana stocks, they could be caught up in the weeds with rising rates. And well, how is that? What do long treasury bond yields have anything to do with the fabulous sort of growth opportunities in marijuana? Well, as a number of your guests have said and explained that the prospect of growth in the marijuana industry is years down the road. Yes, we're going to have legalization in Canada, so that's probably let's get really optimistic, $10 billion a year market, but that doesn't justify the market capitalization of all the companies in the marijuana space. You're going to need much bigger market than that. So everyone's, I think John Kaiser was talking about this in his Discovery Watch earlier in the week. That people are now going to be looking at the U.S. market. Well, there's a huge market. So now maybe you're talking. But who knows what the U.S. market would be if it were legal? But the problem is, it's not legal in the U.S. It's legal in some states. And until the U.S. government legalizes it, then that market's really not going to have full potential. Now, when is the U.S. government going to legalize it? Well, who knows? But the earliest we're talking is after the next presidential election, which is 2020, I believe, right? So, but it's not going to happen overnight. And what then this means is that investors who are buying marijuana stocks on the assumption that there's going to be this great market opportunity, they've got to wait. And they're giving up other investment opportunities, including very safe government bonds. Now, as government bond yields become more attractive, it makes the waiting game more expensive in the marijuana sector. And no one knows when the tipping point is when investors will start moving money from these speculative, plays that require a lot of patience and a lot of hope, into something safer. We don't know when that's going to be, but what we do know that as interest rates on the long bond goes up, that makes those safer investments more attractive than the riskier investments. So right now the trend is not the marijuana stock's friend on that front. So we'll have to see how it plays out. All I can tell you, Jim, is on CanadianInsider.com, we're continuing to see lots of insider selling in the marijuana space. Your listeners can go and look at Money is Moving on CanadianInsider.com. And you'll see there's been some selling in the largest stock, Canopy Growth, just recently ahead of legalization in Canada, and as it turned out, ahead of this spike in interest rates. So that was pretty good timing on those insiders' parts. Could we see a big move up again in marijuana stocks? Sure. Maybe in advance. There's all sorts of reasons that people can make to hang on to these investments and to hope that they'll keep going up as other investors jump on board. I guess I'd just be mindful that the treasury market, what American investors will see as the safest investment is becoming more competitive for investor money than it was even a week ago. So there's something important to keep in mind there.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, with Amazon going great guns and they're a delivery company, I remember you saying it might have been a good idea to get involved in companies that make shipping goods or packaging goods. Is that still a good bet?
Well, I think at this point in the market, you've got to look at what you're paying for any growth story. And in general, there are, some players who have experienced a nice run up in advance of, tagged along with Amazon, I should say. We've seen a couple of logistics companies that are trading at reasonable prices in Canada because of the NAFTA uncertainty. So ironically, I think that there are some opportunities in Canada that will happen. When I say will happen, I think we have to wait to see how this interest rate situation plays out, and we also have to see, Jim, how this Sino-American trade war plays out. I think before getting too excited really about any investment opportunity right now, we really have to see when the Chinese come back, if their market stabilizes, if they're able to demonstrate that their economy is going to continue to grow despite the challenges they've got on both the trade and the debt front. So we've got the global situation. There's clouds hanging over it because of the Trump trade war. In general, though, the fundamentals have been pretty good. If you can get by that, then yes, you could look at these stocks that kind of tag along on the e-commerce side. But I would just wait. I would just wait to see how the oil price settles down here, because any company that's involved with packaging and logistics is going to be subject to the oil price. If we continue to see Brent crude head towards $90, I mean, that would be the next stop. If you're talking 100, it's going to put a damper on a lot of these logistic companies and companies that really require deliveries in trucks and trains and airplanes. So it's going to be something to watch very closely here in the month of October. So basically it's a month of caution, I think we've got right now, and there will be opportunities for sure. The Canadian market's been beaten up, but unfortunately, this late cycle where we expected good growth opportunities around the world to help the Canadian market, they've been short-circuited by the Trump trade war, and now we've got a breakout in the bond yield. So it's going to be a very tricky time for investors here. The one interesting development, we're going to have to see if it can continue tomorrow on Friday after the jobs report, is the gold price. Gold price has not gone down to recent lows over the last few days, which is a bit surprising for two reasons. One is that higher interest rates usually compete with gold very well. Gold doesn't pay a dividend, as I'm sure all your listeners have been told by people who are bearish on the gold market. But it's true, they do have to compete with interest-bearing securities. The fact that gold has not given up the ghost here as rates have risen, I think, is important. Also, China is on holiday, and I would have expected that if there was going to be an attack on gold by short sellers, people wanting to dump it and make a quick buck, there hasn't been a better combination of events than we've seen over the last 2 weeks, Jim. So cautiously optimistic here about the role of gold going forward. But look, we have unemployment coming out in the U.S. If it's a blowout number, gold could be put to the test again on Friday. We'll just have to see. But so far, so good.
We're seeing a big gap in the difference between West Texas crude prices and Western Canadian oil prices. Have the prices in Western Canada fallen to the point where producers may just close off the taps and wait for either a pipeline to be built or just a better market?
Well, I haven't heard too much of that. I mean, we heard on the natural gas side. I mean, there is an index that people can follow on CanadianInsider.com, and ETF actually tracks an index. It's the Canadian Crude ETF. The symbol is CCX. Trades on the Toronto Exchange, and unfortunately, it's been floundering here. Even as Brent crude prices are soaring. The good news is it's well off its lows from earlier in the year. So, while it's not participating in this recent run-up, times have been worse for Canadian producers, and I would suspect that so long as we continue to see a bid in the global oil markets, that the Canadian producers will be able to tough it out here. I mean, they've been through a lot. And right now, I think times are better than they were certainly a year ago, and Trans Mountain is slowly but surely on its way. We saw some interesting activity this week with Husky Energy making a hostile bid to take over Meg Energy. Husky Energy is a big international integrated oil company. They're into exploration, oil sands, refining, and they were going after a smaller Canadian company that produces unloved Canadian crude. So the fact that you've got some activity like that, to me, Jim, suggests that the energy sector may actually be a decent area for Canadians to find some value, Canadian investors to find some value in here, going in a very tricky market. So if you're going to put your shopping list together for anything over the next month, I'd certainly be looking at selected Canadian energy names on pullbacks. That's for sure.
Ted, the elections in Quebec, what do they mean for the Canadian economy?
Well, this is another medium, maybe even shorter term piece of good news for Canada. With the CAQ winning a majority government in Quebec, it's going to really change the narrative, Jim, in terms of priorities in Quebec. And what happens in Quebec, it doesn't take long for it to filter into Ottawa because of the clout that Quebec carries. And what we had on Monday night, we had I'm gonna call it pro-business, but really, it's really pro-free enterprise, pro-market leaning government that was elected. This is something that has not happened in Quebec in my lifetime, and I think it's going to catch a lot of people by surprise. They're talking about lowering taxes, reducing government in Quebec. I mean, just to get your head around that idea, there are multiple generations in Quebec that have no idea about a concept of smaller government. It has never existed. They've just elected a government that is open to the Energy East pipeline. So we're talking about a radical shift in the narrative coming out of Quebec, and it's going to have repercussions right across the country in a very positive way. I think if you're a free enterpriser, it's going to shock a lot of socialists, and it's going to shock a lot of people who, have been used to the welfare state being supported by the Quebec government. So stay tuned. I expect we're going to be in for a few surprises coming out of Montreal, and it's going to hit in Ottawa as well. Is
this good news for Maxime Bernier's People's Party? Because he's very much a free trade, free enterprise person.
It's fantastic news for both them and the Conservatives. It gives both of them a chance now to establish a base in Quebec off of the CAQ's momentum. It'll be a competition between Andrew Scheer and Maxime Bernier, I think, for that vote. One would think Maxime Bernier would have the advantage, being from Quebec. But look, there's a year to go here before the next election. So it's really an opportunity for the pro-market People's Party to get some momentum. It's also an opportunity for the Conservative Party to run with Energy East and run perhaps on that with that standard bearer, being a standard bearer for that project. So yeah, it's good news for both parties. We'll see which one is able to take advantage of it the best. It's not good news for Justin Trudeau. It's not good news for the NDP. But it's good news for everyone else.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.